Hey there everybody, my name is Danny K, and this is going to be a quick little video on exponential moving averages, what they are, how they're calculated, and how I use them to kind of predict and get a good idea of my targets for where I want to buy and sell certain assets in Bitcoin and the crypto markets. Essentially what an exponential moving average is, it is an average that basically places greater weight and significance on the most recent data points based off of how many periods you've selected. So let's say you have a 21-day moving average on a one-day chart. So that means each period, which is 1 day, is going to basically take the average of the past 21 days, average them, and then weigh out, giving more significance to the most recent days than it is to the further back days. And why this is important in comparison to like a regular moving average or a smooth moving average is that by giving that weighted power to the most recent data and giving it more relevance, you can track and see the swings of the price and where it's going in correlation to the trend and that average much more quickly. I really like using them as kind of rough guides as to entry and exit points and where I think the price will end up going during certain periods of time. It is very important for you to realize that this is not set in stone, that these periods that you can put in on your charts change all the time, not only from different market cycles and different trends, but even day to day, even the type of trade you're trying to do, whether it's a swing trade, an intraday trade, a long-term investment. So it all depends, and I'll show you what I mean. So if we were to look at this chart, this is the Bitcoin USD on Bitstamp. We all just saw that big blow off top. You look at that and say, okay, so I want to use my averages. I have a 4-hour chart. What average should I use? And here I have the 12, 21, and 90-day average. And in this current market cycle, I have seen that 90-day moving average has been very key. As you can see on the 4-hour 90-day moving average, which is this red line here, when we had this all-out dump, it touched perfectly on that indicator. And you're probably asking yourself, well, it would have been too late to figure that out now. How did you know that? Well, if you go back, I noticed a trend happening where the price would dip on or very close to this 90-day average. And then seeing that in the cycle, if you keep going back even further, I think the trend really started to see like a little bit here, some here, a little more there, but that's not as much of a dump, some there, and there. To me, it signifies, okay, so this 90-day moving average is a pretty good indicator in terms of, price reoccurrence, I guess. I don't know what a good estimate of where the price is going to be going. So you see this blow off top, and if you looked at the 90-day moving average, you're going to have it hits right there, 1035, 10355 perfectly. Now I didn't put any buy orders or short orders up here to sell here. I do it like a little bit above, because sometimes I'd rather give up a few percent and make sure I'm in a trade as opposed to missing it. But again, like I said, this all changes based off of the chart you're looking at. So if we were to go to something shorter, like let's say the 1 hour, and you look at this, you don't really see much of a correlation. Yeah, the 12-hour or the 12 period is kind of going along the same lines, same with the 21, but for the 1 hour, I generally use, let's see, a 12, a 21, and I think I go 300 is the input that I like, 300 period on the hour. And here you'll see another very similar correlation to that. Obviously not as on point as the 4-hour, but still a pretty good representation. I don't think you'll be able to see it in prior usages here, but it had very similar trend patterns there. So I'm not sure, given that we've had this parabolic blow off top, I think that as long as we respect this 90-day, well, in this period, 300 period moving average, that we're going to stay kind of in this bull cycle. But that remains to be seen. This is not financial advice. I'm not a financial guru. I'm just a guy that looks at charts. And these numbers, and I will post like what inputs I use for the 4 hour, the 30-minute, the 1 day, etc. in the comments below. But I think it's very important for you to realize that everyone trades different. Everyone looks at charts differently. So what might work for me in the patterns that I see may not work well for you, or you may see something completely different. So what I suggest is going into TradingView, changing around these different kind of EMA values on different time frames and see what works. So if we were to go to like the 1 day, I think the 1 day I do something more along the lines of, I think it's like an 8 period, an 8 period, I think, what was the other one? I think 12 and a 30. 12 and 30. And this one goes along pretty well here. As you can see, kind of touches there, didn't touch here. Makes me kind of wonder, maybe we'll see this 30-day get tested at the 98. If the 90 period average that I showed you earlier on the 4 hour breaks, then this would be my next estimate for where the price could potentially go. But again, a lot of this all depends on a lot of other factors. This is just a single tool that you can use to get a rough idea. Two, I'll show you, I think on the 30-minute here, we'll lower this down, we'll get the 8, I think it was 12, I think I did, 8, 12, and 30 as well. You'll just notice, like if you're doing intraday trades, you'll notice that a lot of the times, you will have this red line, and if it's trading below it, we're in a downtrend, trading above it, uptrend. But for the most part, a lot of the time, these prices want to go towards a converging of the averages. They want to go towards all of the lines coming together and the price sticking in that realm. So like here you'll see the price is going up. These lines here are spreading further and further apart. Eventually they're going to get too far apart and they're going to want to come back together. So a good thing to remind you is that when the EMAs are spread apart, this is not a time for you to be buying. Maybe a potential time for you to be shorting, but again, I would suggest using a lot more indicators than just one to make a decision like this. And again, always do your own research. Never invest more than you can afford to lose. But yeah, so that's just a quick little breakdown of what I do in terms of how I use EMAs to help me trade. And again, fiddle around with it, see what numbers work best for you and what works best for you in terms of your trading strategies. And with that, thank you.